Yo, what's good, everyone? What's good? Hope you guys can hear me loud and clear. I know I've been playing with the settings on my mic lately, so it should be loud enough for everybody to hear me pretty well. All right, so good morning for all of you who are tuning in. It is August 26th, Saturday morning, 9:06 here in Utah. It is beautiful weather outside. I got a nice low 70s today in this fine morning. Man, I went to go touch some grass earlier. But overall, it's been an incredible week so far. And I wanted to really just go over the few things that we were calling out on Monday and Tuesday and really just review everything for the week. Now, I will be honest with you guys, I didn't have a profitable week this week. It's actually been a while since I haven't had one. I mean, it's actually been a while since I have had a week that I wasn't profitable. Um, so it was kind of a weird week for me. The energy was kind of off, but I was overall just pushing through it. But I'll show you guys where where overall I took my trades, what areas I was looking for. My biggest L I think came out of Tuesday, and so we'll go over that together here on the Market Mentorship Overview. Now, check it out. We were looking for some longs into this previous weekly high here. And pretty early on in the week, we ended up hitting that. So, kind of want to show you guys that by Wednesday, we had already taken that high out. Okay. Now, what's really cool is early in the week, Monday, Tuesday, Monday sets a low, and then Tuesday comes out and sweeps the initial low of the week, creating the low of the week for Tuesday. Okay. Then Wednesday sweeps liquidity up, slams price action down again, and comes back for Thursday to sweep previous daily low once more. After we swept previous daily low, we've only been climbing up higher. Now, looking at this whole week, you can see that we came in to a previous weekly high here, all the way to the higher range, that the higher end of the range here. Now, obviously, as I've been mentioning on the monthly, I am extremely bullish. I do believe that we're going to continue pushing to the upside. This one right here is a previous weekly high, my new weekly objective for next week, and my new monthly objective right here. So you guys can see that we're fairly close to all of that. We did, and it's weird. Okay, look. What's this high right here? Where is that? I bet that's within the weekly candle. See, yeah, it's within this week right here that the month started over. Interesting. Either way, I'm looking for that previous monthly high right there. I want to see, that's the high of May. I want to see, it was the last day of May too. But that high of May into this previous daily gap, into this gap overall, we're just going to call these gaps. Okay. I'm going to call it a gap. Okay. Into that previous daily gap right there, we have traded a fair way into that price action, and we were anticipating bullishness, and that's honestly what we got. So what that meant for me, at least, is I believed in shorts. Okay, I believed in shorts the whole week, because I was really long on DXY, and so my bias for indices was mainly short, and that really bit me in the ass a lot this week. So, one second. Let me know if my mic gets a little too loud, okay? Or distorted. All right, so the longs really make sense, and then really what was the best looking day for me was that Thursday longs right here, was when we came down, swept previous daily low, we came into this internal liquidity, took that internal liquidity level on the daily, and then just continue pushing to the upside despite distributing on the 4 hour. It was just an internal liquidity sweep for the daily. Beautiful price action delivery. Notice how Monday sets the low. Wednesday sets the low. Remember, Wednesday was the one that swept that major liquidity to the left. Where is it? Our initial low of the week, which was that initial goal or objective of the week. Okay, and you guys can revisit this on the on the trade room. Okay, Monday mornings live trading session, or on Tuesday I share with these with you guys as well. But we're looking at this high. Notice how Wednesday hits that high, and just distributes to that downside, right? So we hit our weekly objective, trade into a previous area of distribution, come back down and start rejecting. Now, the rejection itself is what builds up the internal liquidity for the Thursday. So we come down, sweep internal liquidity, and then continue moving to the upside. Beautiful price action overall. I loved the price action delivery this week. But what that was for me is on, let's see, we got Tuesday longs, Wednesday longs, Thursday longs. And so on Tuesday, I was looking for some shorts because the XY, right? I'm going to cut it all out. I was looking for some shorts because the XY was, looking like it's going to go long. And so on Tuesday, I got clapped quite a bit trying to short to this low right here. Now, notice we did end up hitting the low. My main objective to short from, my main point of interest was this imbalance and then this breaker right here. Okay, and obviously you guys can see that we didn't make it to that breaker nor to that imbalance. On my feed, we never took out those highs. On different feeds, we definitely did. We definitely took out those highs, and on this one right here, you guys can see it a lot better defined on the 15-minute. This was the whole breaker, and so we did type into the breaker. Okay, we did end up tapping into the breaker on the low end of the breaker, but we never tapped into that imbalance on the futures feed. I know on Oanda it did, and I know on 8cap liquidity it did, which is my Forex funds, but it didn't on mine. So I was in the shorts, and I honestly did not like those highs, so I closed my short manually, and this ended up shorting from where it was at. It was after this 15-minute liquidity sweep right there, we just started melting to the downside, but it wasn't for a bit. It was a couple of rejections, and then really like the only clean play in my eyes was right here. But by then I had already took my entire risk of the day, which was 1% or 0.5%, and so I was down 0.5% at this point. And so I did not participate here. The R&R was not there either. So yeah, not the best way to take those setups. Are a little bit more difficult, but if you would have been looking at the only insufficiency that was available to us, me and my boy RJ were talking about the inversion imbalances, and I want to start paying attention to these a lot more. Not just that, but I want you guys to pay attention to them a lot more as well. So I'm gonna start bringing these to you guys' attention because I see them, I just don't mark them out all the time. But I want you guys to know that these imbalances like that, right, the one that was a manipulation. Remember, this high right here on other feeds looked like this. Look, boom, it looked like that. It swept all that liquidity. So what was this imbalance right here? It was the manipulation to sweep those liquidity, to tap into that breaker and move price action lower, right? We don't always have to have a manipulation to a level of liquidity. We have manipulations to either a level of support or a level of resistance. Okay. If we look at price action, always looking for liquidity, we're going to find ourselves sitting on our hands quite often, because as you guys know, not always is price action bouncing off liquidity. Okay. Price action has many institutional levels. Order blocks is one of them, right? We got imbalances or insufficiencies, gaps, that includes gaps. Okay. You have liquidity. So you have these three things, right? Order blocks, there's plenty of different styles of order blocks. Imbalances or insufficiencies, gaps. Then you have liquidity. Okay, all three of those, and maybe I'm missing some, but all three of those create support and resistance. Support or resistance. Okay, so for example, this breaker, this bearish breaker, is the support for price. Right? That imbalance was a level of support for price. It didn't come back to it, but that breaker did, and it created a level of resistance for price. So price action came up to it, traded below it, came back up to it, and found a newfound resistance right there. So what does that mean for this imbalance? Manipulation to the upside, broke price action down, right? But right here, as soon as price action, the body closed below right here, as soon as we got a full body closure below that imbalance, any price action that returns to that imbalance, that's your entry. So you can see right here, we stabbed right back into price action 1, 2, 3 times before we ended up melting towards the downside. Okay, so pay attention to those inversion imbalances. Really clean price action. But no, I got clapped. So my initial clap was right here. It was this inversion imbalance right here. And I was looking for the longs into these equal highs. And so that was my first mistake, was looking on the opposing side of my overall daily bias. Okay, that puts you automatically on the lower probability side of the market. Automatically. That doesn't mean that you're correct on your bias, but when you're looking for your daily objective, and the reason we look for a daily objective is to grow our accuracy, to grow our, commitment to a setup, to grow our commitment to our trading plan. And so as you develop your whole bias, as your bias gets better, more accurate, as the years, months, days, weeks go by of you doing this, you're going to not notice that your higher time frame bias is usually always on point. Being that my higher time frame bias was short for this day, and I can show you guys straight from my journal where that was, but given that my bias was overall short for the day, I should have just only stuck with the shorts. But every now and then I deviate from my overall bias, and this ends up happening. So it happens. It's cool for it to happen, and just don't let it happen too often. And eventually it doesn't have to happen at all. You know what I mean? Because this was a no trading day. When I went over this day, it was a no trading day for me. There was not a single point in price action which gave me the appropriate risk to reward, right? Or setup. And so me taking the long and then pushing on the short caused me to end up losing or participate on a low probability day, and caused me about 0.5%. Okay. So yeah, I would not recommend trading against your overall bias. The thing is I was telling one of my students during the 6-month, one of my one-on-ones this week, and it was along the lines of, if you learn how to trade it with your bias, okay, if you learn how to trade it with your bias and always follow your bias, even when it's incorrect, if you learn to follow your bias consecutively and accurately, you will eventually learn when it's okay not to follow your bias. Listen to that piece. If you learn how to follow your bias, and I'm talking about religiously following your bias. If you learn how to follow your bias, okay, you will be able to learn when it's okay not to follow it. But you will only be able to develop those rules from following your bias day after day, week after week, month after month, year after year. Right? I've been journaling my bias for almost 2 years, and I still fall susceptible to not following the bias. But this one was the first one in a while. But you'll notice, like, you remove lower probabilities like this. It should 100% have been a no trading day for me. Nate, bro, did you catch the longs on MXN? Sorry. Brother Nate, happy to see you, brother. I did catch the shorts. I'll go over that later. The longs were beautiful. So let's go here 1 second. So DXY, 1 second. Let me go out back to DXY and kind of refer back to the days here. So Tuesday was that day where we went long after taking out Monday's low. Then on Wednesday, we went long. But notice this. My daily objective on Tuesday was the long. Okay, was more longs. And then by the time I showed up, let's see. Rafael said, I'll say is better to follow the actual bias and not. Yeah, 100%, brother. 100%. Jason said, did you catch oil? No. I'll leave that for the traders that don't know how to trade indices. No offense. But on Wednesday, so I was looking for some longs on Wednesday, and then this is where we were at on Wednesday. Where was it? There we go. Okay, so this is where we were at on Wednesday. And so personally, I wanted to see some more longs, but we had hit this weekly objective, and I was just like, man, if we distribute, you got to understand, this is probably one of the most important things when it comes to the range. Okay, if you're identifying the range that swept liquidity and, shift in market structure, your imbalance, your distribution is already confirmed. Here's where a lot of people got effed on Wednesday. Is yes, I was long for the day, but then seeing this, by the time I hop on the charts, immediately caused me to be bearish. And I'll tell you guys why. Even though structure is bullish, higher time frames are extremely bullish. Even though all of those conditions were extremely bullish, what happened here is you have a range with no liquidity. So if you look from the low to the high of that range, there is zero liquidity. There's no structure that we can come tap out. There's not much liquidity to stop this price action. And if our belief of the market is that the market is liquidity engineered, it is engineered to be seeking out liquidity points, then we have to understand that this range, if it does not have liquidity in front of it to stop price action or slow it down, the range itself is the liquidity. Now, a lot of you may need to go rewatch that piece and take notes on that part, but it's very important. When you acknowledge your range, and your range, and price action is clearly distributing in the opposing direction, okay, or price action is clearly going in the opposing direction, retracing in the opposing direction of your expansion of your range. If you can identify the liquidity within your range, you're good. Okay, but if you can't identify any liquidity within the range from top to bottom, that right there tells me that the range itself is the liquidity. Okay, so then there you guys can see the price action ends up melting down for the day. And on this day, I was short. Okay, I was short on this day on Dow. I was looking for shorts initially. And then price action started distributing pretty freaking hard, right? And so I acknowledged the fact that Dow had taken out the Asian low. And the only thing was that it took it out at like 9, right around that time that the distribution started on DXY. Okay, and so when that distribution got started, really the only bullishness here was this break of structure and the sweep of liquidity. This imbalance right here was the main reason why I was looking for shorts. Okay, is this imbalance right here. So the shorts did kind of bite me in the ass at first. So I was in it. I was in the shorts this day from somewhere here. Hold on one second. Right here. It was after 10 a.m. We had came into that imbalance here on the left. Okay. We had came into this imbalance here on the left. I'm going to mark it out one more time. Right here. Let's see. Okay. So when we came into the imbalance and then rejected towards the downside and created that imbalance there, I got in right there. Okay, at that imbalance. And I was aiming for the low one more time, for the Asian low. Really easy play. And so when I saw that market structure started rejecting down here, and I saw that DXY started dumping. When I saw DXY started dumping, and I acknowledged the exact same thing that I just walked you guys through. No liquidity within my range, so I anticipated DXY to just short for the rest of the day. At that point, when price action was right here, I went break even because DXY was a goal against my whole bias. Then price action exploded to the upside. Okay. You guys can see that a lot better here. Exploded to the upside. And so my overall objective was to continue going long. Okay. So once I got stopped out, I actually went on the 1 minute. And man, this was a crazy day because I was doing a private stream for my 6-month program. And I remember I got stopped out right here. I get stopped out right here. And so I still had a buy limit over here active, and I forgot to delete it. And my broker doesn't allow over a certain amount of contracts. On this day particularly, I was capped at 4 contracts. So I had 3 contracts open down here for a buy limit because it was my take profit on the shorts. And so because I didn't close that one, I tried to buy 3 more contracts right here on this imbalance. And it rejected it. My students that were on the call can vouch for this. It was actually quite tragic. I was like, damn, that was a really nice entry. Like, I'm long overall now. It was clearly longs after that. And so price action pushed up to the upside right there. Stop loss at the low of the imbalance, or however you would have wanted it. And then, of course, you have your immediate high, which is really the only area that I would have been aiming for. I wasn't aiming for like anything crazy or beyond this initial high of the day. And right there was just like a nice 1 to 3.5, easy peasy, right? And then you have your previous daily high, which we ended up reaching, but way later on, right? We ended up coming back enough to take out this position and then hit the previous daily high. So for me, it was just this trade right here. Beautiful setup. And the setup kept doing it. It kept giving it up right here. comes back, creates the breakaway gap, right? Creates a breakaway gap. That gap, preferably, you don't want to see it get filled all the way. Breakaway gap comes down, sweeps previous 5-minute low into it. And then after we sweep that 5-minute low, you guys can see we sweep that 5-minute low and create what? A shift in structure with an imbalance. Then you have this breaker right here, which swept liquidity and shifted market structure in the other direction. This is exactly how I marked it out for my 6-month program as price action was printing. While price action was printing, created this imbalance and marked all this out, and then we ended up just watching price action because we didn't end up participating from down here or here. We ended up just watching price action because right here, honestly, the risk to reward just didn't make sense. It was right here. I would have put it at this low, I'm not gonna lie. So the risk to reward just didn't make sense. Like, I'll take something like that only if I'm already leveraged in from down here, right? And once I go in here, then, you know, the break even point is probably like up here, and I go break even on everything, and, you know, just let that trade go. But I'll take a trade here and a 1-2, 1-1 even, but I have to absolutely already be in a trade on that setup. If the overall main setup is a 1-2, I will not take that. Right? I will not take that. So Jason said, I'm glad you can snipe plays in the market since you can't snipe on Halo. Man, I could say the same with you, but on the market, at least you can snipe on Halo. But anyways, we'll leave that. I don't want to feed into that type of energy. You guys know that it's positivity here, so let's see. Okay, the final one that I wanted to show you guys was this long position on Dow. No, actually, I did take the shorts on Thursday. Okay, I want to show you guys this shorts on Thursday. Let's see. Let's see. Okay, it was this day. So, all right. So on DXY Thursday, we just went long all day. Long all day. It was this minuscule retracement to this imbalance right here. Check this out. It was a 9 a.m. candle. Okay, 9 a.m. candle. Look how small that retracement is. Okay, look how small that retracement is. Now, peep what happened on Dow at 9 a.m. Look at that. So while DXY was making this like small ass retracement, then you have Dow Jones creating this big ass retracement. Like, I mean, it was the high of the week. It took out the initial high of the week on Monday. Right? It completely took that zone out. On a small, very small retracement on the DXY was a major retracement on Dow Jones. Right? And so when I was looking at this, I'm like, man, I'm not going to lie to you guys. I was just like, dude, this thing's going to dump, melt hard. I was just looking at these previous daily lows right here. That low right there. just looking at those lows, and I'm like, man, bro, like price action's gonna melt. And so the only thing that I didn't like was the fact that, you know, we were, by the time I got in, we were pretty low in the range. Now, a lot of people will shy away from price action like this. All I can tell you is just follow your range, follow the money. Like if you're afraid of us getting a retracement, just follow smaller time frame. If a smaller time frame started accumulating, then yeah, you'll probably get a retracement. But even then, when major liquidity has been taken, the objective for the day has been set. Write that down. When major liquidity has been taken, the objective for the day has been set. Okay? The major liquidity is the objective. It's either the objective or it's the liquidity that's going to take us to the objective. The major liquidity or the higher time frame liquidity is either the main objective or what's going to take us to the main objective of the day. Okay, which was the low right there. Let's see. So you guys can see it right here. Hold on one second. For some reason, I can't hear my music. One sec. There we go. Okay, so I called these areas out for my 6-month mentorship. And I was looking at this imbalance and just looking at these lows. The first lows, right? Just the first lows right there. And you can see the imbalance. We come into it. Go to the downside. I entered once here. And then I entered again here. We have this breaker. And then we have this imbalance within the breaker. I took another entry here. And I just took it to the lows. Right? Now, on that first one, give multiple entries. One sec. On that first one, you guys can see we first come into it, right? And then the second time, look, we come from the breaker to the imbalance. Look, to the low of the imbalance that has already been played. This is why I always mark out original imbalances. That's why I only mark out original imbalances. It's because I will only be looking for price action to either find resistance or support in the original areas that the market provided. And this is why you guys can see we revisit that low one more time before melting down. Right? We move down lower. Okay, and you guys can see we revisit that breaker and the imbalance and then continue to move lower. Beautiful price action delivery. And I believe the last one for me this week was on Friday. And I can't remember if I was a part of the longs or the shorts. 1 second. Let me go look at it. One sec. You know, I don't remember where I took that. Very quick play. It was a long precision, but I know it was for the initial high of the day. It was like right after 10 a.m. Maybe I took it on another asset. I could be tripping. But I went long into this high right here. Oh, okay, I know what it was. Okay, so it was long into this high right here. Okay, and it was from this imbalance right here. That small ass imbalance right there. Why that imbalance? Because it came down, right? It came down, came into this liquidity first. And now I know we didn't go long for the whole day there. Okay, but we took out all those lows right there, initial lows of the day. Okay, and create that imbalance to do so. So that imbalance brought my attention. I did go in it right there. This was actually the last trade of the day for me right here. I mean, the last trade of the week. It was it was really quick, right? But believe it or not, I still kind of like broke even for the week. I was still down like 0.5% for the week because on Tuesday it was like that bad. So yeah, I ended up basically kind of a break even week for me. Really slow. I took it really slow the rest of the week. You know, I didn't even intend to trade on Friday. It just presented itself and I pulled the trigger. But overall, guys, really solid week. And I wanted to leave these few minutes, of course, if anybody had any questions, comments, or observations. Let's see. One said, LOL, how do you go about choosing the immediate the immediate high? How do you go about choosing the immediate? I don't know where you were with that question. Oh, how do you go about choosing the immediate high or low as a target, or higher or lower? Because for example, like on this one, let's go on the Dow shorts, right? Let's go back to those Dow shorts on Thursday. So my overall objective for that day was this previous daily low. Okay, so I'm not just gonna short every single time to my higher time frame objectives, but on my way to my higher time frame objectives, I find intermediate targets to partial out on. Okay, so this was my intermediate target right here that I would like to partial out on. So my intermediate target or immediate target has to be the one that gives me the 1 to 3. If that one doesn't give me the 1 to 3, then I don't take the trade. Right? On this one, I took it based out of the 1 minute. So it was more over here with the tighter, a little bit of a tighter stop. Okay, the immediate target has to make sense. Okay, the final target, it's obviously going to always have like a higher, bigger risk to reward. But the immediate target has to be the one that makes sense. Okay, you can have the overall objective, but that's how I come across these very easy targets, is because I follow my higher time frame objective, and any higher low on the way to my higher time frame objective is my immediate or intermediate target for the day. And sometimes I'll close it all at the intermediate target, especially if a major level of liquidity has been taken for the day. I usually just only go for the immediate target, because I don't anticipate 2 major liquidity objectives to hit on the same day. It did on this day, but I won't anticipate that every single time. So that's why on this day, I specifically went for just the intermediate low and not the overall low of the day. Great question. Andrew asks, major liquidity has been taken. The objective of the day has been set. I'm not sure what you're referring to there. Zay said, what do you mean by original imbalance? So for example, the original imbalance right here, check this out. Okay, so a lot of people would say, oh, this imbalance right here is, right? They're looking at that imbalance and they're saying, okay, the imbalance here is right there. That's the imbalance that's left. What I mean when I say make sure you are marking out the original imbalances is make sure that when you see an imbalance, don't only go for the imbalance that's left. Go for the imbalance that was originally created. Because if you go for the insufficiency that's just left, notice I would have totally missed this entry. See, that second entry was based from this order block, yeah, but from that low of that imbalance. So original insufficiencies can get played multiple times. Let's go to another original insufficiency. This is an imbalance right here that swept this liquidity to the left. And then you have original imbalance. Even though it was already filled, played, you come all the way to the right over here and you see how that original imbalance still comes into play over here to the right. Oh, you said write it down, so you typed it out. Oh, okay, makes sense. When major liquidity has been taken, the objective for the day has been set. Yeah. Original imbalances. Give me 1 second. Okay. Yeah, so original imbalances. That's a really good question. Okay, original imbalances. Always keep the original imbalances in place. Original gaps, original imbalances. You don't want to just discount an imbalance just because it's already been filled. Last thing you ever want to do. It's like this one right here on the monthly. Hold on. I'm gonna erase everything on my charts just because I've already broken down the charts for you guys. I've already gone through the week, and I honestly need to clear everything out. Okay, so now let's go to the monthly. It's like this imbalance right here. You know, you could say that this imbalance is completely filled, but what if price action comes back down one more time out of that imbalance? You know, and we do it where we just barely tap only the high of that imbalance and then continue moving higher. Again, it's just looking for areas of support or resistance that have already been played out previously. So previous areas of support and resistance can be new supports, levels of support and resistance. Even if you're looking at a bearish imbalance. Okay, let's look at a bearish imbalance. Friday. Bearish imbalance. Let me find it. Let me find the good. Oh, there it is. Okay, right here. Look at this. Look at this push down. We pushed down to sweep previous daily lows. Okay, and then create an imbalance to the downside. Do you guys see the 15-minute imbalance? Look at this right here. 15-minute imbalance. Then you drag that out to the right, and you can see magic box. Where did we come down to? We trade over it. We close above it. Okay, we close above it, indicating bullishness now. And look where we come back down to. Right? We had this imbalance down here that everybody was looking at. But you guys now understand imbalances on a deeper perspective. Right? So, original imbalances. This is called an inverse imbalance. I always look for the imbalances that were a part of the manipulation. Right? The ones that swept liquidity and shifted market structure in the opposing direction. Exactly. Yeah, brother, of course. Of course. All right, guys. So we're getting towards the end of the stream. I just want to share this with you guys for those who've been stuck around the whole stream here. I want to show you guys this. Okay. I am happy to tell you guys that I will be hosting a ICT Smart Money Concepts online bootcamp. I tend to do boot camps in person. Yeah, it's usually what we always do, myself and Matthew. We haven't discussed when our next in-person boot camp is. I'll talk to Matthew a little bit more about that later on. But as of right now, we haven't discussed or agreed on any in person yet. So what I'm going to do for this winter is the presentation that I was showing for my in-person boot camp. I will be teaching these boot camp online instead this year. Okay, so for a one time before I change it, I update everything again, and my trading style every year will improve and change and update. And so for now, for this time, I am doing a boot camp on all my current knowledge in the market. Okay, it's taking you from A to Z, from all the ICT concepts that I understand, know, and love, and you guys see me use, to all the smart money concepts that we've used and learned previously, to clarifying it all and putting it all together in a pretty little bundle, so that way you guys can understand an A to Z perspective in price action. This is not a trading psychology boot camp. This is purely charts. I know on my in-person boot camp, some of you have been there. I did a big segment on psychology. This is not going to have that piece. This is just going to be solely included and focus on charts and charts alone. It is going to be a 2-day boot camp. We're going to meet for about 2 to 3 hours each day. So about an overall of 6 to 8 hours. And so we're going to meet on the 28th and 29th, right? And I'm going to show you guys my whole strategy from A to Z. And I'm only going to be talking about analytics. No no journaling, no trading plans or anything like that. I'm just going to be talking about price analytics, following and learning how to view the order flow. If you guys know about my trading, have seen my trading, then you guys should know that I mainly trade indices. So just know that I will be talking about Forex assets and how to look at Forex divergence and intermarket analysis on this. And everything that I teach can be utilized through Forex. But just know that this bootcamp will be mainly centered around indices. And I will be talking to you guys on a big segment of it on the second day. Is going to be mainly talking to you guys about indices. So if you've ever wanted to learn about indices, learn how to trade indices, I've been trading them for a little over 2 years now, and I've learned a lot from it. And I wanted to put everything on a pretty little boot camp that you guys can have the recordings. I will be recording the whole thing for everybody that is attending it. You guys will receive the recording on that same week. I'll just need to edit it, add the logos, watermarks, and whatnot, and then send it to each one of you. But the recording will be available for you guys as well. So there's a lot of benefits to this. If you guys do want to participate, if you guys like the way that I look at price action and would like to improve the way that you understand smart money concepts or ICT, maybe you watched ICT and it became too confusing for you, I got you. No worries. So with that, guys, let me know let me know on the link in the description. On the link in the description, I'm gonna actually just set it up right here on the chat real quick. Hold on, I'll drop it in the chat for you guys. Okay, I want to drop you guys the link, okay, to book my free consultation. That way you guys can just reach out directly to me. You guys don't have to. You guys, 1 second, I'm gonna open up the chat real quick. Right there, boom. That's my I'm gonna put it in the description as well. You can reach me at, and I'm gonna put it on the description of this video, so that way you guys can have it. Reach me there. It's a free consultation. You guys don't have to pay anything. If you guys want to know more about this bootcamp, how to be a part of it, how to gain one of those limited seats that I'm offering, which is, again, I'm only doing 30 spots. That's it. Reach out to me. It's very affordable. I'm not doing this thousands of dollars bootcamp. Like, this is going to be fair, affordable for everybody, because, again, the goal is to reach as many individuals as we can. So guys, again, also on Monday I start my 30-day stream, so I will see you guys on Monday. We'll talk a little bit more about this on Monday. At the end of the boot camp, at the end of the 30-day stream, okay? At the end of the 30-day stream, I will be giving away a 50K account. So if you guys would like to know how you can win this 50K account, I will see you guys on Monday. All right? Take care. Have an amazing weekend. Trade responsibly if you are going to be trading on the weekend, Jason. And yeah, guys, love you guys. Even if there's a couple clowns on the chat, honestly, it's all love. I appreciate you guys for even taking the time to be in here. Like that means a lot to me. Like, I don't care if you're with me or against me. You took the time to be here today, and for that, I appreciate you. Take care, guys. Clap easy. Reach out if you guys need anything at all. And I will talk to you soon. Peace.